This is the Thompson Cast. I am Mel Thompson. One of the things that foreign direct investors must always be mindful of are taxes. The taxes I speak of are those that are levied against companies and investments in foreign countries. One of the best ways to analyze and understand this is by looking at some of the largest players that are involved in foreign countries that are actually American companies that rely heavily on investment from people who are foreign direct investors in ancillary ways. In other words, a major U.S. company that is now in another country, having a clear presence in that country, the other businesses that are around that business, that grow up around it, how are they treated for tax purposes? And when I say this, I'm talking about the suppliers and vendors who make that American company work and run every day while it has a presence in that foreign country. The taxes on companies that were there that have some bearing in relationship to a potential startup or reassignment of an American company are the ones you should be looking at. You can do this by looking at companies by industry and by topic if you can also do a search under marketing that pertains to a particular type of industry, whether it be agricultural, manufacturing, or some other industry that may be in the financial services sector. A good example of this is Starbucks. Starbucks obviously relies on other vendors. And the other vendors that were present that do quite a bit of business with Starbucks that were in the UK before Starbucks ever decided they were going to expand there are the ones that foreign direct investors should constantly be looking at and should have looked at before. Because if they had, they would have not been shocked by the fact that Starbucks now may face a UK tax probe after certain members of parliament have started to ask questions. And my point is that even the people who are running Starbucks on the ground in the UK should have done their due diligence ahead of time to know how other companies that they rely on are treated for tax purposes. By doing so, they may have been able to avoid such an inquiry. Now, what I'm saying is no reflection upon Starbucks, what they are accused of, what they have done, or what they have not done. I'm just saying one of the better ways to avoid being inquired about in the first place is to know how other companies that are in your own marketplace are treated for tax purposes. By doing so, you have a clear understanding of how to avoid a problem yourself. And foreign direct investors also must do their due diligence, because if they start investing in companies, even if they are American brands that expand to foreign countries, you may wake up one morning and see that there's a huge tax levy on your investment, or there may be a problem that may be a horrible issue for your return on that investment. Now, to give a good picture of what's going on with Starbucks, because they are a very, very large brand and everybody knows who they are, what they have been telling investors is that the UK is looking at the issue of how they're reporting the taxes, essentially what their losses and gains were. And it's more or less a issue of accounting. And the one issue that stands out is the amount of money that Starbucks made as opposed to what was potentially reported. Now, I am no tax expert. I have a good understanding of this, and I'm certainly no accountant. But the way it looks to me is if there was a problem in the reporting. Now, this could be a glitch as far as how forms were filled out and how things were done. However, there's a history when it comes to public finance and when it comes to taxes. the one way to avoid this was not only double checking it, but double checking it against how other companies were treated in same and similar situations. What are the potential levies? What are the potential fines? And what are the fees to get in total compliance? These things are all costs that are associated with a foreign direct investment. And not only should Starbucks have known these things and been proactive in preventing this problem by knowing how other people are treated, foreign direct investors also have a responsibility to themselves to know exactly what the field of play is on the ground before they start investing in American companies that go abroad. Now, the number one issue here is that Starbucks is being investigated for not paying taxes on $1.2 billion. And the $1.2 billion, if you turn it around in American dollars as opposed to pounds, it actually comes out to $1.93 billion. And these are sales, and this goes back to 2009. And when you start going back a few years, the fees to rectify the problem, the fines build up, and then your return on investment is lower. How they did this should be looked at in the bigger picture. How do other companies that are in the same and similar marketplace, and who are particularly those who are vendors that do business with Starbucks, how do they pay their taxes? How are they able to avoid taxes? What are the repercussions for making errors on your taxes in Great Britain? This would have given some degree of information as to how much credit insurance or preparation the foreign direct investor would need to insulate themselves from such a problem, such as a lower return on investment because Starbucks is going to get whacked for fees for restructuring this tax problem, and also fines for making a mistake in the first place. By knowing what's going on the ground, you can protect yourself, even if the company that is the target of your foreign direct investment has failed to do so. This is the Thompson Cast. I am Mel Thompson.